Yesterday, what did I do? Yesterday, I took up two aspects. One, subdivision of accounts, and then number two, subdivision of journal entry. I have already told you repeatedly that transactions as and when required affected, we find out the debits and credits, and these are recorded in the book of prime entry, that is journal. Now, an organization made huge number of transactions every day, and all the transactions are recorded at the end of the day from the book in the book journal. And again, from journal the accounts are so friends, one rectification, that it is class number 25. Okay, class number 25. Now, in class number 24, I have taken up two aspects: accounts and its classification, and journal and its classification. Accounts transactions are of three types. I have already told you. One is cash journal, cash transactions, when the payment is made instant, and when the payment for any transaction is made in some deferred date, that is known as credit transactions. So for cash transactions, we record the account, or we record the transaction in the journal. Credit transactions are also recorded in the journal, and in such cases, the journal book will be a very voluminous one. There are some problems in having one journal, one book of prime entry. Number one, it will be a very voluminous one. Because of huge volume, it cannot be taken here, it cannot be moved properly. This is number one. Number two, when you are recording the journal, you have to record in the ledger too. Then if the other person is engaged for recording from journal to ledger, that is for posting in the ledger, in that case it will be a problem, because the book is occupied, the book is in your hand, and it cannot be, the book is in the hands of Mr. X, and Mr. Y cannot post the accounts in the ledger. So that is why what is the solution then? The solution is divide the journal into different categories. As per transactions, the journal is categorized into three parts. Generally, we have seen that there are two types of transaction: cash transaction and credit transaction. First, cash transaction we record in a journal, and that is known as cash book. And all the credit transactions are recorded in some day books. Credit transaction, which credit transaction? The credit transactions as that of purchase, sales, return inward, return outward. That is a revenue item. Purchase and sale of revenue item in cash. Revenue item means the trading item, the business in which I am dealing in. That is known as revenue item. And that revenue item, purchase and sale of revenue item, return and inward and return outward of the revenue item, these are all made on credit. So they are put in the credit journals. I have listed a good number of credit journals yesterday, and that is for purchase day book, for sales day book, for return inward. That is, whenever you have sold the goods may be returned by someone, and in that case, that return is recorded in return inward book or sales return. And again, in that case, similarly, if there is any return on your part to the person where you have purchased the goods, that is, you are returning goods to your seller, that is purchase return or return outward. So for this return inward, return outward, the purchase book, sales book, all these are credit journals concerned with the movement, concerned with the transactions which are credit in nature, and these are recorded in these two books. And there is another book, there are other two books, a group of two books, that is bills receivable and bill payable. It is also related to purchase and sales, and that would be dealt with later on. Okay? Now these are the credit journals. And now for cash transactions, we prepare two types. We have two types of division. One for bigger amount, it is cash book, and for smaller amount, it is credit book. But over and above these cash transactions and credit transactions, a good number of transactions are affected in our organization. Those are not, in fact, defect organization, defect or any transaction, but they are transactions. There is no movement of cash, no movement of goods, nothing else. But still there is there are some effects of those transactions, which are those I have already told you, adjustment entries, which we make at the end of the flagging of the year. At the flagging of the year, adjustment entries, rectification entries, any wrong we have committed while recording or posting, primary recording or posting, that would be rectified, or casting, that is in adding, all will be rectified. This is rectification entries. Then purchase and sale of assets. Purchase and sale of assets in credit, on credit, that is recorded in that. Okay, and there are other two opening entries. Whenever you are starting your business in the inaugural day of your accounting period, all the assets are debit, all the liabilities are credit, and the difference will be treated as capital. And at the same time, at the end of the year, you also pass closing entry, because all the revenue items are closed with the help of the master revenue item, that is known as profit and loss account. Okay, so this is the scenario I have already dealt with yesterday. Okay, now today I am taking up that. If you consult the yesterday's one, you will see that journal is divided in the first category is cash journal. Cash journal has got two dimensions, one for petty cash book, and one for bigger amount, it is cash book. Now, what is the nature of this? I think, say you have, I am taking some examples. You have started business. What is the journal entry? Cash account debit to capital. Okay. Say in our examples, what we have done in 20, that is in December 1, you have started the business with the capital. How much? It is 20,000. Okay, cash account debit to capital. In normal cases, what we have done in our journal entry, we have made that type of statement. No? Okay, to cash account debit to capital. Okay, 20,000, 20,000. In that way we have recorded. Clear? And when we are putting it in the posting it in the ledger, we prepare two accounts. One is cash account, and the other one is capital. Clear? Just you see the transaction. I am giving the detail over here, and after that I will take up insert. Okay. Cash. You have started business. Started business with cash. Started business with cash rupees 20,000. So cash is coming in, cash account debit to capital. Okay, this is the first journal entry. And this is recorded in the ledger. So it is journal. So in the ledger, we have to prepare two ledger accounts. One cash and the other one is capital. In cash, what do we write? Cash is debited. So in the debit side, to capital. 20,000, and in the capital credit, one cash 20,000. This is the normal practice, this is the normal thing which we have already covered while doing both the journal and ledger. But now you see, we are preparing cash account, we are preparing capital account. Now, there is some problem of hollow. Now a solution is there. We are putting no entry in the journal, in the book of private. We want to maintain a single book, that is cash book, which will serve both the purpose of journal and ledger. Now see how do you do that? Just you start, and that is the preparation of cash book. Started business with cash. What is the journal entry? Cash account debit to capital. Now in capital, what you will write? By cash. Now I am making another account, and that is to capital. To capital account. There. Just you see, it is serving as a ledger account. So instead of having a journal entry like this, cash account, debit to capital, then cash account, then capital account, we are making only one, opening only one book, and that is known as cash book, where we record the accounts, the transactions primarily. And it also serves the purpose of ledger. ledger. Now, a voucher number will be there and ledger folio, say it is 20,000. Clear? And now, in the journal, what we do? We write narration, no? Being the business started. And now, here we are writing being the amount invested. Now you are getting, so it serves both the purpose. And which date? It is in 2020, December 1. Clear? So cash account debit to capital. Clear? And since we are in journal, in ledger, we do not write narration. Clear? But here we are writing the narration. So this cash book this is not cash account. What is the difference between cash account and cash book? In cash account, we did write no narration. Here we write the narration where? In the journal. Here we are writing the narration. Cash account debit to capital, being the amount invested. So it serves both the purpose of cash book, journal and ledger. Clear? So that is the beauty, that is the uniqueness of cash book. So now you see, so all the cash transactions we would go on a recording over here. Clear? Now come to the next point. Cash sales of goods 475. What is the journal entry? What is the journal entry? Cash account debit to sales. Clear? Now, in cash book, what should we write? By sales. How much? So 475. Clear? And we have to open another sales account, and there what will I write? Sales account. Oh, sorry. Here it should be cash account debit to sales. So cash is debited. Also we should write here to sales 475. And in sales account by cash 475. Clear? This is the normal practice. Okay, this is the normal. Now what I am doing? I am not writing in the cash book. I am writing in the sales account. I am posting in the sales account and writing over here. Number 1. 2 sales. Clear? 2 sales account. How much? 475. Now you see. So here, what should be in addition? Being the goods sold on credit. Being the goods sold, for cash. Being the goods sold. You need to write for cash or on cash because it is written in the cash book. Clear? I think it is. Any problem? I think there should not be any problem. Okay. Now you see, whenever you are writing one aspect of the transaction as an addition, whenever you are writing one aspect in ledger, what we do? In ledger, we only record one part. Okay. In journal, we give an addition. So this serves both the purpose of ledger and the purpose of journal. So cash book is regarded as journalized ledger. Journalized ledger. Okay? Cash book is regarded as journalized ledger because it serves both the purpose of the journal and purpose of ledger. Now you see, come to the next point. So friends, since the space is very small, I am not writing any narration, okay? Just you write narration in your own copy. Clear? Now you see, purchase of goods in cash. How much? 300. What should be the journal entry? Purchase account debit to cash. Clear? So we have in purchase account, you will write to cash, and in cash, what will I write? I am writing over here. Purchase account debit to cash. Clear? How much? It is 300. Okay. Now here in purchase cash book, in cash account, what we write? By purchase 300. Clear? And in purchase account, we should write cash. And in cash book, what will I write? By purchase. So what would be the narration? The purchase of goods in cash. Clear? Understood? Now I am repeating what I have done. Cash book serves both the purpose of journal and ledger. It is ledger because we record only the one aspect of the transaction. And it is ledger, it is journal because we are putting the narration over there. And that is why it is known as journalized ledger. Okay? Now, here the purchase of goods on in cash, purchase account debit to cash. Okay, so I did purchase, and in purchase we should open one purchase account, and there we should write to cash. Okay, here. In this way we are recording all this. Then cash received from Gobrango. What is the journal entry? Just you see what should be the journal entry. Cash received from Gobrango. Cash account debit to G. I am writing Gobrango. How much? Cash received from Gobrango rupees 680. I am writing. Then in cash account it should be 2G. Being the cash received. How much? B account. 683. Clear? So it is D account. And what should be the narration? Being the cash receipt. Clear? Being the cash receipt. Then paid for house rent. Paid for house rent. What is the journal entry? A house rent account debit to cash or rent account debit to cash. The journal entry is rent account debit to cash. So in the cash has been credited, so we should write by rent account. How much? 200. Clear? It is December 3. Oh, no, sorry, it is December 4. Purchase of goods in cash. By purchase. So cash is from Gobrango and then paid for house rent. Then purchase furniture. What should be the journal entry? Furniture is coming in. So furniture account debit to cash. So what should I write? Buy furniture. Buy furniture account. How much it is? Furniture 250. So friends, I am telling you, requesting you go on solving in your own page, okay? And whenever the question of total, your casting will come, you cast it and let me know. And making the comment, you let me know what should be the total. Okay? Then next, just friend, I am repeating, okay? I am repeating for the let you know those who come may come at later, may come late. First of all, cash book serves both the purpose of journal and ledger. It is, first of all, you consider it as a ledger. That's because we are considering only the one part of the account. Just like I have started business in with capital. How much? 20,000. What is the journal entry? The journal entry is that cash account debit to capital. And in normal journal, what will I do? I in the cash, I will record to capital, and in capital, I will record by cash. But instead of making cash account, I am making cash book. Preparing cash book, and here we are writing the narration. So we are putting both the one aspect of the transaction and the narration, and it becomes a ledger too. So it has got the two features of both. Features of ledger because we are recording one aspect of the transaction, and it is journal because we are recording, we are writing the narration too. So the features of journal and ledger both are over there. Now next, sales goods for cash rupees 1,400. You have done it repeatedly. Cash account debit to sales. So it is two sales. What is the date? The date is 4. Clear? So friends, I am not writing an addition. I have already told you what the addition will be, and you put it in your page, please, because our space is very, very low over here in comparison to what we require. Paid for wages. Paid for wages. What should be the journal entry? Wages account debit to cash. So what should I write? Cash is credited. We write over here 8.
8.
It is 8. Now, why wages? Wages paid. Cash. Wages account debit to cash. So wages account is debited. How much amount? It is 300. And now you should write an addition over here, being the amount of wages paid. Okay. Now next one, cash paid for stationery. So you have purchased stationery. So stationery is coming. Stationery account debit to cash. Okay. The cash account has been credited, and we should write by stationery. By stationery. How much? 50. Clear. And then open a bank account. This is a very, very vital one. Please take note of this. Open a bank account. Whenever you are opening a bank account, what is happening? Cash is not coming in. What is going out? Cash is going out. So cash account is credited. And what is debit? What is debit? Receiver is debit. Who is the receiver? Bank is the receiver. So the journal entry is bank account debit to cash. Clear? So in the bank account we should write to cash, and in the cash account or cash book we should write by bank along with an addition. By bank. Being the opening of the account or being the amount deposited in the bank, and the bank account is open. Clear? So friends, you scan it properly and go on recording. Next one. Goods purchased from the record. Just you see, goods purchased from Gopal will be 600 on 9. Goods purchased from Gopal. Purchase goods, so goods are coming in, purchase account debit. What should be credit? What should be credit? There is nothing, it is not mentioned whether it is for cash or on cash. If it is given, purchase goods from Gopal on, only just to say, if it is written only purchase goods, then we should take it granted that we should take it as granted that this is a cash purchase, and the journal entry should be purchase around into cash. And if it is written goods purchase on cash, so it is very clear that it is cash purchase. But when it is not stated whether it is cash cash or credit, but the name of the party is given, then it should be treated as credit transaction. Now, what is the journal entry? The journal entry is purchase account debit to Gopal. Now, where do you put? It will take part at purchase account. In purchase account, we should write to Gopal, and in Gopal account, we should write by purchase. So, is it record? Should we record in the cash book? Should we record in the cash book? There is no chance of recording in the cash book because it is credit transaction. Are you getting me? So it is credit transaction, and it should be recorded in our purchase bill. Clear? So it should be recorded in our purchase bill. I think I have cleared that. So this transaction has got no value over here. So we should not trade them for the preparation of the cash book. But we should consider it by minutely. The purchase of goods from Gopal is a credit transaction, and the journal entry should be purchase account debit to Gopal. So the two accounts that they are to be recorded, it is one in purchase account and the other one is Gopal account. Clear? Then so there is no chance, there is no mentioning, no aspect of cash. So there will not be any Bought in the cash book. Here, then again, goods sold to Govindo. Govindo 900. 900. Goods sold to Govindo. Therefore, here is the same fallacy. Okay, sold goods. Goods are going out. So sales account credit. What is debit? Cash is not coming in. So it is credit transaction. So the journal entry is Govinda account debit to sales. Okay, so it will be recorded in the debit side of Govinda account. Okay, to sales, and in the credit side of the sales account by Govinda. Okay, so there is no cash aspect, so it should not be considered for preparation of cash book. Now, old furniture sold rupees 425 on how much? On 11. Old furniture sold. What is the journal entry? Purchase of furniture account. Sorry, sale of furniture. You are getting cash account debit, and furniture is going out. Furniture account credit. So the journal entry is cash account debit to furniture. So it should be in the cash book. We should write cash account debit to furniture. To furniture. Being the sale of old furniture, you should write in that. How much the amount? Oh, sorry. Now next, cash receipt from Govinda. So you earlier sold, on 10th you sold goods to Mr. Govinda. So it was Govinda account debit to sales. But now Govinda is giving you the amount. Now what is the journal entry? What is the journal entry? Cash account debit to Govinda. Now cash is debited. So in the debit side of the cash book you should write to Govinda. How much is this? 900. Clear? Now next, sold goods, sales of goods in cash to receivables. Very casual, very natural. Cash account debit to sales. So we should write to sales. It is 13 to sales. What is the amount? 340. There. Then purchase a machine. You have purchased a machine. What is the journal entry? Machine is coming in, machine account debit, and what is going out? Cash is going out, cash account credit. So it is the journal entry is machine account debit to cash. So in cash book, cash is credited. So in the credit side, we should write by machinery. By machinery. That's 1,000. Okay. Now paid to Gopal. You have paid rupees 600 to Gopal. Whenever you purchase goods from Gopal, what is the journal entry? Purchase account debit to Gopal. Now it was not considered for the preparation of your cash book, but now you are making payment to Gopal. What is the journal entry? Gopal account debit to cash. Okay, so we should write Gopal account debit to cash. So it is in the cash book. You should write by Gopal. Gopal account. So much? It is 600. Clear? Understood? So I am taking some other accounts. Some other, just for your discussion today. This is what I have done. Okay, let me complete it first. I want to repeat it. Cash book is a form of journal which serves both the purpose, a journal and a ledger. It is a ledger. Why? Because we record only one aspect of the transaction. Okay, as started business with cash rupees 20,000, cash account debit to capital, and we have to open two accounts. One is cash account and the other one is capital account. Clear? So in the capital account we should write by cash, okay, and in the cash account we should write 2 cash. Clear? But instead of making cash account, separate cash account, we are making such an account which serves both the purpose of journal and ledger. We should treat it as a ledger, because we are recording only one aspect of the transaction. Clear? And it is, and whenever we are putting the narration over there, it serves the purpose of journal too. So it is both serving both the purposes, journal and ledger, and that is why cash book is regarded as journalized ledger. Clear? And this is the form of recording, because we have made huge number of journal entries minutely, and I think there is no problem in recording this. Just the second one is what? Cash sales of goods. Journal entries, cash account debit to sales. We have to record it in 2 accounts. In the cash account, it should be 2 sales, okay, and in the sales account, it should be by cash. Purchase of goods in cash. Journal entry, purchase account debit to cash. So we should open one purchase account, and we should write. We have the cash book, so in the cash book it should be by purchase. Clear? So, friend, what you will do? Right now I am making only the cash book. You please, in your copy, you please record it simultaneously. You open your cash book and also open the ledger accounts, which are differently given. Okay. Basically, what I have done? I have done cash account debit to capital. I have not opened the capital account. In your house, you open the capital account. Clear? And you complete the whole set, because it is a journal. It is the transactions. These transactions first record in the journal entries in the journal. Okay, you make the journal in your book, and the part ledger account should be recorded in cash book, and other accounts have to be opened. And after balancing, costing and balancing, you would get the balances and prepare the trial balance in your house. And let me know tomorrow what is the effect of that. Clear? Next, you see the cash receipt from Gourango. You have received cash account debit to Gourango. You have to open 2 accounts. One is cash account and the other one is Gourango account. In the Gourango account, it is by cash. Okay, cash receipt, yes. And here in the cash book, it is to Gourango, because you are receiving cash from Gourango. The cash account debit to Gourango. Here I have written to Gourango 680. Then paid for house rent. House rent account debit to cash. So you have to open 2 accounts. One is house rent account and the other one is cash account. You have your cash book, no problem. Here we are recording both, and you have to open the Gourango rent account. And in the rent account, you should write 2 cash, and in the cash book, you should write by rent along with an addition, being the house and rent, but being the payment of house rent account. House rent. Then purchase of furniture, obvious furniture account debit to cash, clear. So in the cash book it is by furniture, and the narration would be being the purchase of furniture. Okay, and in furniture account it is 2 cash. Then comes sell goods for cash account debit to sales. So here it is 2 sales for 1400, and in sales account it should be by cash. Clear? Paid for wages. So it is wages account debit to cash. Wages should be debited, and cash should be credited. So the credit side of the cash book we have written by wages, being the wages paid. Okay? Or you may write for the wages paid, for or being, whatever it may be. So the more or less the practice of whenever you are writing the narration, there is practice of either being or for. Clear? Cash paid for stationery. So stationery account debit to cash, it is in the cash is credited, so cash account debit, stationery debit to cash. Okay, in the credit side we have written by stationery, and in the stationery account it should be 2 cash. Clear? Then open a bank account. You are opening a bank account. So your amount is going out, so cash is going out, cash account credit, and who is the receiver? What comes in? Nothing is coming in. Receiver, bank. So bank account debit to cash. We have to open 2 accounts. One is cash account and the other one is cash. Sorry, one is bank account, other one is cash account. Cash account is already given because we have, so we should write 2 bank. By bank. And in cash account we are writing by bank, and in bank account we are writing 2 cash. Clear? Then here, the goods purchased from Gopal 600 is very, very low. You have done it, you are quite knowledgeable right now in accounting. So it's a cash credit transaction. So journal entry, credit transaction. In my schooling age, I was told, we were told that this should not come in the cash book. Why this should not come? That was not told in that day. At that time, but I am letting you know, friends, it is why you journalize the transaction and you can easily understand why it should not be treated while to pay cash book. What is journal? Purchase goods from Gopal. Journal is purchase account to Gopal. So there is no cash aspect. So it should not be taken place in the cash book. Goods sold to Govind, the same fashion. Govind account debit to sales. No cash element, no cash book. Okay. Old furniture sold, furniture account debit to cash. So in cash book it is buy furniture. Okay. Oh, sorry. Oh. How much it is? So cash account debit to furniture. Cash account debit to furniture. 425. No? Receive cash from Govindo. Now we are getting cash from the Govindo for the sale of goods. So cash account debit to Govindo. Now cash is debited and Govindo account credited 9. Then comes sold goods in cash. Cash account debit to sales. So in cash it is 2 sales, 340, and in the sales account it should be buy cash. Purchase machinery to purchase cash. So here it is. Buy machinery, in the purchase of machinery, and pay to Gopal. Gopal account to cash. So I am making the payment. So cash is credited and Gopal is received. Gopal account is debited for Gopal. Now I am adding one thing. Withdrawn amount from bank. Say December 20. Withdrawn cash from bank. Withdrawn cash from bank 2000. Now what should be the annuity? Cash is coming in, cash account debit, and who is the receiver? There is no question of receiver because debit we have got. So who is the giver? Bank is the giver. So journal entry is cash account debit to bank. We have to open 2 accounts. One is cash account and the other one is bank account. In the bank account it should be by cash, and in the cash account it should be to bank. And we have cash book, so we are writing to bank. With the amount withdrawn from bank. Okay, you should write the addition to the bank. How much? 2000. Clear? Achha. Now I am reading one thing. December 23. Purchase of goods paid by check 1000. Purchase of goods paid by check. So you are purchasing goods, you are getting the goods, purchase account debit, and what is going out? Nothing is going out. Who is the giver? Bank is the giver, so bank account is credited. So the 2 aspects of the transaction, purchase account debit and bank account credit. So it should not come in the cash book. Clear? And now take on 30th December 30. Take a loan from Raj, rupees 2000. Now you are getting the amount, cash account debit. What goes out? Nothing is going out. Who is the giver? Raj is going out. Giver, Raj is credited. Okay. So it is cash account debit to 30. To Raj. Raj loan account. Raj loan account. How much it is? 2000. Clear? Now we have recorded all the journals. Okay, all the transactions. Now then comes the question of total. Now you total it. How much it is? 5, 10. 1, 5, 15, and 22. 2, 5, 14, 15, 22, 28, 52. 3, 7, 8, 28. Okay. What is the amount? Hmm?
27,000.
That's good. Now it is now 2700 to 20. Now it is, we have to balance it. You know how the way of balancing. So the debit side is higher. In cash book, debit side should always be higher, because if you don't have the cash, you cannot make the payment, and it should have the debit balance. It is 27,220. Now what is the difference? 25, 1,000, 1900 and 520. Clear? So the total cash you have, the inflow of cash in your hand, 27,220, and the total outflow is during the month is 7,700. So difference is the amount in your hand, that is known as cash in hand or the closing balance of cash. And it is 30th, no? The December is the 31st. No? And the balancing should be made as the last date, 31st, by balance CD. This is by balance CD. And in the January, in 2021, January 1, we have the balance in hand to balance bottom. Okay, how much it is? 1900 and 520. Clear? So that is, friend, that is the preparation of cash book. Clear? Just some issues. Here I have given you the transactions of the starting of the business. Very often you will be given for preparation of the cash book, cash opening cash in hand. That means the opening balance of your cash. Clear? Or that should be in the debit side of the cash book. Clear? The opening balance of cash, that should be in the debit side of the cash book. Clear? And tomorrow, here we have only single column. Now we the human beings are very intelligent. We always try to reduce our load of works. So that is why, say, here we have only recorded the flow of cash, inflow of cash and outflow of cash. Just I am giving you an overall idea. All inflows of cash will be debited, okay? Because cash account is debited for all inflow. Sale of goods, okay, sale of furniture, receive cash from anybody else, any from the debtors or whatever it may be, taking loan and others. So in all this, inflow will be debited and outflows will be credited. So that is the formula given by the teachers. But friends, my suggestion, no question of formula. Try to go into the depth and first analyze the transaction and go on working as well. Okay. So no question of memorizing. It is not the question of memorizing, but in the present world, what I am getting during my last experiences so far, my experiences so far, the teachers basically give just याद कर लो, A इधर आएगा, O उधर आएगा, A इधर जाएगा, O नहीं जाएगा, O इधर आएगा. But don't go on depending on that. How many formula will you memorize? No question, but only memorize one thing: proper generalization. Proper generalization. The basic item I am telling you, friends. First of all, generalizing, then ledger posting, okay, then balancing, and after balancing, the question of summarizing, the fiscal balance, and from that, the preparation of final account, and balancing. So this is the basic part of your accounting. This is the basic part of your account, and this part is known as bookkeeping. So friends, my suggestion is that do it properly. Okay, just I am giving you one thing. Now, here we have only recorded cash transactions. Clear? Cash transactions have been recorded. Only inflow of cash. I have also given you some transactions related to bank. Opening a bank account. Okay? Bank account debit to cash. But bank account is not recorded over here. Clear? Bank account has not been recorded over here. Then what will I do? So some suggest that, sir, it is better for us to prepare a cash bank book also, like cash book. Okay, because all of the concern with the flow of cash, sir. What the most important thing is that, sir, you do one thing, make the, for inflow and outflow of cash, you make a cash book, and for inflow and outflow of payments or receipts through bank should be for another bank book. So, like cash book, we can also prepare a bank book. Okay, say, what I am giving you this example. Open a bank account. Say, open a bank account. I am writing over here, and guess what, friend? It is bank. I am writing a bank also. Bank. What I have told you in one journal entry, I have told you open a bank account. What is that? Open a bank account. What is that? Open a bank account. So what is the journal entry? Bank account debit to cash. Clear. Now I have cash book admitted by bank. Now in bank book I should write to cash. To cash. Being the amount account open. Clear. Now I have withdrawn cash from bank. What is the journal entry? Bank account debit to cash. Sorry, cash account debit to bank. What I have told you? Cash account debit to bank. Here I have written. Okay. So in cash book I have written to bank, and in the bank I should write by cash. Being the amount withdrawn. See, I have paid check to Mr. X. Okay, I have paid check. What should be the journal entry? The amount will be withdrawn from the bank. Okay. So I have given. Mr. X has received the check, so X account debit to bank. Clear? In that case, I will write the bank book by Mr. X. Clear? Say 1,000. So in that way, as we are preparing cash book, we can also prepare a bank book. Any problem? Understood? Achha, now, I would like to minimize your labor. How would I? So I have to prepare one account, one book, one generalized ledger, that is cash book, and another generalized ledger, bank book, where we should record all the payments through bank, all the receipts through bank. Instead of doing, so I have to have two sets of book, one cash book, generalized ledger, and another bank book, generalized ledger. But I do not have so much time frame in my hand, so I would like to make one set of book, that is cash book. Okay, and this cash book will have the two columns. Okay, two columns. One should be cash column and one should be bank column. Understood? So one should be cash column and the other should be bank column. And how they record? Say, started business with cash account debit to capital. Now just you think one thing. Open a bank account. What should be journal entry? Open a bank account. What should be journal entry? Bank account debit to cash. Okay. Say it will be 5,000. Then what would I record? Bank has been debited. Okay. So in the debit side of the bank account, we should write this one. Bank account has been debited. So here we should write to cash. Okay. And cash account has been credited. So here we should write by bank. By bank account in cash 5,000. Clear? So therefore, now this is known as double column cash book or cash book with cash and bank. And we are writing both cash and bank in one account, and that is why in ledger folio we should write C, contra entry. Contra entry, okay? As because it is the same folio. Here. And in the same folio, say cash book, cash and bank column, double column cash book is the folio number 1. So in the same folio, your cash is written to cash, the amount is written in the bank. Okay, and since why it is contra entry, you can write F entry. Okay, but instead of this, why contra? Because cash, the alternative on contra of cash is bank. So that is why we write C. So here we are writing to cash, See, and now it is written in the bank, and in the bank side it is in the cash, and it is writing the account name bank. Okay, and that is known as double count cash book. And I will take up this double count cash book tomorrow.